A declining energy and agriculture sector have pulled down the Midwestern economy, according to one academic who tracks the region's financial health. For the second straight month, the Mid-America Business Conditions Index dipped below growth neutral, according to Creighton University's Ernie Goss. The monthly status report cited lower employment, wholesale inflation, and a stronger U.S. dollar as factors, putting downward pressure on the economy. The 9 states covered in the survey show the region lost almost 1%, or nearly 15,000 jobs in the last 12 months.
What we're seeing is the manufacturing sector, particularly the manufacturing sector either linked to agriculture, energy, or exports, or in some cases, 2 of the 3. Those areas are having a real tough time of it.
The Fed's delay on a short-term interest rate increase, according to Goss, is seen as a negative sign for the domestic agricultural industry looking to expand export markets. And the higher dollar makes U.S. goods more expensive, forcing America's trading partners to search elsewhere in the world for the same products.
And that affects us in many ways. In other words, it's the equipment dealer in these rural communities having a tougher go of it. But then you go back to the producer, that would be the John Deeres, the Klaus, the Caterpillar. They're having a much tougher go of it. Then if you go back a step from that, the metal producers that produce metal for the John Deeres, the Klauses, and the Caterpillars.
Many producers maintain both a grain and livestock operation to help guard against boom and bust cycles. However, the double-barrel decline is making more than one farmer worry about the future.
It is a difficult time out there, but again, the farmers are conservative in terms of their own personal fiscal policies. They've got pretty good cash balances. They'll do well through this. 2016 is looking to be much better in terms of all farm income. Energy prices, we've got to still wait and see on that one. That one's a little tougher.
And the energy boom that helped boost the economies of Oklahoma and North Dakota has become their Achilles heel. Oil futures selling under $50 a barrel have forced cutbacks in those regions. Goss believes as many as 5,000 jobs could be shed in North Dakota alone in the fourth quarter of 2015 as companies look to weather the storm.
North Dakota is one of the few states in the nation that did not enter the recession, and now we're seeing it's not a recession, still not a recession, but it's feeling like that for a lot of sectors in North Dakota and Oklahoma, another state that we survey. I'm still bearish on oil, bullish on agriculture once we get into 2016.
And that could include a rebound in the cattle market, which has struggled in recent weeks. Producers have seen a drop of more than 20% over the last 3 months and a 30% fall over the last 12. Feeders haven't fared much better. After topping out at $235 in December of 2014, the sector has plummeted 21% since then.
We look at the last couple years, 14 we saw record high cow-calf returns. There's still thoughts we'll see those here in 15, but I think there's still signals for continued expansion at this point. Yeah, we've had some fallout there in prices a lot faster than we had initially anticipated, but I think things just all came all at once here.
Kate Brooks, a livestock economist at the University of Nebraska-Lincoln, sees a lot of macroeconomics causing the price decline, but also acknowledges some microeconomics are in play as many heavy feeders are being run through the system.
We can't just think locally, we've got to think globally as we think through all this process. In the short term, some of those local things do come into factor. Cow-calf producers, I think cost is going to be a big player as we move forward, and as we see these lower prices, the low-cost producer is the one that's going to be able to still benefit, even if we're not at record high prices.
While Brooks and Goss realize they are painting a bleak picture of the marketplace in the immediate future, many wonder if there is any room for an optimistic outlook of agriculture in the long term.
Our economy, I sometimes say, is the healthiest horse in the glue factory. It's not a return to the 80s. I don't see that at all. Since 2009, we've had very good farm income. Now, 2014 farm income was down from 13. 15 is going to be down from 14. Now, I think 2016 is going to be up. A lot will depend on what happens in Congress. We need approval on these trade pacts. We need to see our global trading partners, their economies improving. Right now, during an election year, American voters are just not that supportive of trade, and it's, for an economist, that's the oddest thing. Trade is very good for the economy. It's not very good for voting, though.
For Market to Market, I'm Paul Yeager.